All right, welcome to another video. Today we're going to evaluate and analyze PayPal, and we're going to see if this stock is doing well. What can we do? Should we buy the dip that recently it's been coming under, and whether it makes sense for us to get into it now. So before we get started, keep in mind none of these are recommendations to buy, sell, or trade any stocks. It's just my own personal opinion. So keep that in mind, and let's check things out. First off, let's go in and take a look at the PayPal holdings here as we take a look at the stock. And by the way, you can check out our Discord channel as well for notifications as I release new live events. If we go into a 5-year on PayPal, you can see the stock's been growing fairly well. So when you look at this, the movement's been pretty good. However, recently we've pulled back quite a bit. So this little downside problem, it's kind of an issue, right? So if we look at kind of just the yearly, we are down about 21%. So that's not good. It doesn't look healthy, right? And you can see the stock really has been stuck at around that 300 level. There's been a little bit of problems, and then we just kind of rolled over. So if we just kind of evaluate just the charts here, from the highs to currently where we are down about 37%, right? That's not kind of a year, but that's basically from the highs. So we're down about 37%. And you can see the stock had some serious trouble as we look at this big downward movement here and a ton of huge bearish volume. So that's a big issue and red flag, sort of say. But if you look at just overall the way that this stock's been behaving and performing, you know, from a longer term perspective, the stock's been grinding and climbing higher, right? I mean, it was, you know, around 30 bucks. The stock opened up, continues to go, makes the next move, breaks out next level, continues to go, and reaching into the $300 level. Phenomenal, right? From 30 to 300 in a couple of years, 5 years. That's fantastic. 10x the growth there easily. And now as we get kind of to the pullback, it's also kind of worrisome for some people, right? But again, from the long-term perspective, it's not too bad. If you look at also the Fibonacci levels, we are still right around that 61% pullback, which is a typical retracement, right? So if we go in and we just look at, hey, here's the wave pattern, we expect it to go down and then probably go back to the upside. So from a longer-term perspective, it still looks fine from a general wave-like pattern, the ebbs and flows and the way that it just works and functions. From a weekly perspective, you can see this has been a tough last couple of months, right? Week after week after week after week. So how many weeks is this? So when we really look at it, it's almost 7-8 weeks worth. So two months of selling. And really, if you start going back even a little bit further, you know, it's almost 5-6 months really of just not any upside movement. If you look at from the highs, right here at the 300, we were going sideways for a while, and that is almost a full year now. So sideways to down for a full year, it's kind of, ooh, that's a little tough for the stock. So now as we start looking at, can it turn around? As we look at the daily, what's nice about this is that we're starting to create kind of this upward movement right here. So you can see we've got support, and that stock is starting to kind of get in there. And you're getting into this $200 level. So right from 300, we are now getting into the 200. And if this can start bouncing off of this, that's where things are starting to look good. So if you're looking to get in early, this is more of an aggressive, let me type it out for you, aggressive stance or entry here on the support. And if you want to play a little bit of a safer bet, you can do it after the break of about 200, because that's kind of more along the lines of where you might say, hey, I want to wait or I want to nibble a little bit later. Then looking at 200 is kind of where you might want to do it. You do have a little bit of a gap that happened right around 220, and this could suck buyers in. So especially as you start moving up, that could start pulling people in, buying in there. There's not a lot of selling pressure in that zone. So anyways, one thing that does concern me here is there's not a lot of volume right now on the turnaround. So where's the volume? It's not there yet. So you're kind of watching, where's that going to be? And right now you don't have it, but it can kick in there and start coming in. So as we start looking at just this turnaround, you can see this trend overall has been to the downside. You can see the moving average here has kind of been going down, but recently this moving average, and if we make it a little bit stronger, just so you can see, if we look at this moving average and we start making it thicker, you can see right now, we are now starting to get into some sideways price action, which is usually a good sign because you're starting to see a possible turnaround. And that's what you would probably look for. This 34-day moving average, you can see, is starting to kind of slow down. And we can also put on a 21. Actually, why don't I do this? Just put on a handful of moving averages. And you can see some of them are starting to kind of slow down. This one's, the 21, is starting to slow down. The other ones are still in a downward trend, but overall the first two are starting to kind of curve that stock, which is usually a good sign, you know, when you're starting to see some of that curvature. So anyways, as for investing on this one, look, personally, if I look at nibbling a few shares here and there, that's the way I would approach it. If you're doing option contracts, again, rather than doing 100 contracts right away, you don't just do it all in one day. You'd rather go in and nibble maybe a couple now, and if the stock continues to move to the upside, you know, you could nibble a little bit more throughout next week, a little bit more, and if this still continues, then a nice clean cut break maybe around 200, 210, where the stock is showing you some upward trend, is probably then when you want to start getting in more and more shares. For now, yeah, it's playing in this range, and it's kind of a nice to try and bottom feed off of it a little bit, but you're trying to build up a little position and let the stock prove to yourself rather than getting into it a little too quick. You can see some of these things happening a little with Disney as well, which I've talked about in another video, which you can check out. But definitely right here, when you look at this, also creating kind of a similar pattern where it's starting to kind of turn around a little bit. So when we look at PayPal, you're starting to see that, and that's where, from a longer term perspective, the stock looks good. Medium term perspective, the stock looks good. From a day trading perspective or a shorter term trade, there's not a lot of action right now going on, so I would just kind of step aside for the there's no volatility there going on either. There's not a lot of moves back and forth. There's not a trading range specifically. It's more of kind of looking to buy the dip and buy the area here for maybe a swing trade, a couple months hold, or longer term investing is kind of the way I would approach it. But overall, this, you know, when you really just take a look at the company and you look at just kind of what it's been doing over the max time horizon here, I mean, this stock's been doing fantastic and really exploded way over here, took it higher, and now we're just getting kind of back to that pullback of normal, regular growth. So if you just look at just the general growth, you're kind of back in a nice sweet spot of a regular trend line, right? Over here, this is a lot of hype, you know, a lot of hype and euphoria. But now we're kind of back to normal, regular growth levels. So if you're interested in that and you're looking to buy the dip and you're thinking it's going to pop a little higher in the long run, then obviously it's a much better value at $190 a share than $294 a share. So anyways, hope that helps. Thank you so much for joining me. Enjoy the rest of the week ahead, and I will see you in the next episode. And keep in mind, you can check out the Traders Fly channel for some options trading ideas and strategies.